I'm in the fast lane when the light turns green, and I built tough, I ain't nothing but grit, cause I made rugged blood, sweat, and spit. Yeah, like a horse I fly, better push yourself in for a bumpy ride. I like to play hard, but I work harder, and I weather the storm cause I'm built stronger.
What is up, ladies and gentlemen? We are back. We are live. It is the Freight Coach Morning Show, the top morning show in transportation, coming to you guys every single weekday, 8:30 a.m. Pacific, 10:30 Central, to break down some industry headlines and, most importantly, provide some actual insight into what you can do with all of this information. If this is your guys' first time tuning in, welcome. I also have a twice-a-week long-form podcast that I drop out there for the industry. And rest assured, you guys, anybody who comes on my content, whether it's this live show or my podcast or the long-form interview podcast, they are all transportation professionals, all right? Because at the end of the day, you guys, we are bringing information that you can apply, utilize, and see a meaningful difference in your life. It's one of the many reasons why I proudly fly this American flag in my office is A, we're the greatest nation on earth, and B, I'm living my American dream, and I want to help each and every one of you guys live your American dream as well. Yeah, so rest assured, you know, anybody who's on the show can tell you what a fifth wheel is, or a dolly, or anything, or a Jake brake. So, you know, again, we're bringing you the information by transportation professionals for transportation professionals. It's the real side of freight. There's no way to put it. I say fuck a lot of my stuff too, because I'm just being me. So again, you know, this is just what it's all about, you guys. Before we get into any of these fantastic articles that we're going to be breaking down today, I got to give a shout out to my friends over at VHub, you guys, vhubapp.com. Whether you're a broker, carrier, or a shipper, we all need access to trailers, especially for my fleets out there. Fuel just rose again in price. So if you're out there and your trailer's in the shop, you should never have to shut your operation down because of that. And the best part with what they have, you guys, you get paid to move these trailers. So with what they're working on right now, you guys, they got Milton, Ontario to Montreal. You get paid 250 Canadian for that. They also have Galt, California going to Hutchins, Texas. You get paid $500 to do that. And again, you guys, that's on top of the revenue that you can get by loading out that trailer. They also have Winnipeg, Manitoba going to Vaughan, Ontario for $500 Canadian. And then finally, West Valley City, Utah, going up to Calgary, Alberta for $1,550 US to do that, you guys. So hit them up, vhubapp.com. My friend Stacy Steen and Xavier Campos, they'll be in the audience. Just do me a favor. Let them know that the Freight Coach sent you. Drew Driscoll, what's up? Good morning. Let's get it. Thanks for joining Drew and everyone else over at Axel. Sean, it's that time. Let's fucking go. You are right. Rob Cameron, good morning to you, sir. Pat Green, let's fucking go. Can't wait for today's knowledge drop. April Maroney, let's fucking go to you too. Good morning. Yeah, Sean, and differentials as well. I don't know if they can do that. Whitney Young, good fucking morning. I appreciate you joining and dropping that American flag. Whitney's watching over on YouTube, and if anybody else watches it on YouTube, do your boy a solid. Subscribe to that channel over there. Aaron, what's up? Good fucking morning. Phoenix is in the house. Exactly. I'm going to be me every fucking day, no matter what. So, yeah, I appreciate that. LinkedIn user, let's get it. Got to update those security settings. Yeah, you guys, and you know, again, to kind of like so I put a post out there today. I literally posted the very first video that I ever recorded in all of my content. And it was talking about that because like the last couple of days, my feed has just been absolutely flooded with people giving advice on how to build a brand and what they're going to do this. And, you know, I felt like something very, very strategic was missing from that. And that's the most important element of it all. And that is just starting. You know, again, there's no fucking perfect playbook for any of this stuff. So A, stop looking for it. B, if you're going to start creating content, start. Literally just start putting stuff out there. It's amazing how many people are looking for that stuff. And again, and when you don't have it geared towards what I can gain, because again, I could easily play the game that a lot of content creators do out there in the world and just post about hot button issues and, you know, or for industry specific, talk about who's better, brokers, carriers, or shippers, and all that other bullshit, or, you know, ask like all that shit. Like it doesn't actually progress this industry, and they only do it for vanity metrics. And it's so obvious out there. And it's like, and I can see it too, because it's like the more and more posts, and whether it's in transportation or whether it's in other, just people that I follow as well, they try and get more and more of pushing the line of just obscurity, it seems, just to get a couple of likes. And, frankly, you guys, I was like that early on when I was creating content and stuff. And I changed my tune with it because, again, it's like, what value can I add? And that's what all I'm concerned about. What value can I add? If one person watches any of my stuff and they see and apply what I'm talking about and they see a difference out there, that's all that it matters to me. Like that's truly it, because my goal is to change the fucking industry. It's to literally make a massive difference in trucking, to change this industry that's been the literal same for the last 35, 40 years, and no one's done anything about it. Well, surprise, surprise, motherfuckers, I'm going to be the one who's going to do something about it. You can laugh about that, but I'm being dead serious. My family's been in this industry for damn near 100 years, and I'm not going to let it continue to go on another generation of something meaningful change not happen. We're at the 193rd episode of the Freight Coach Morning Show here as well, you guys. And a lot of that is because each and every one of you continue to show up and show that support. But it's also a subtle reminder about those core issues that we're talking about. Facilities issues. Drivers can't even get a shower out there or a meal or anything like that. And there's a truck parking issue that's in this industry as well. And we're going to continue to talk about this until there is actual change done with that. We do have a increase in fuel, as I alluded to in the intro out there. They're up to $4.58 a gallon nationwide. That's 97 cents a gallon up year over year. I don't need to remind any of my driver viewers of that. And please don't shoot the messenger. I'm just bringing the news to the table here. But again, I get all of that from the EIA.gov. They lay out the fuel chart and everything on there, you guys. It's a solid resource to utilize. All right, with this being a solo show today, as always, I do a little lane report. And this one, you can definitely see the holiday upcharges included in this. So I just pulled a random city to random city, you guys. And it is Atlanta, Georgia to Indianapolis, Indiana for a van. And if you pull out the 30-day, it was at $1.96 a gallon for the spot market. It spiked up to $2.19 a gallon, or not a gallon, excuse me, $2.19 a mile. And then it really spiked to $2.27 a mile over the holiday. And then after the data came through of post-holiday freight, it has since dropped back down to $1.87. So based off of that, when you remove the anomaly of that, it looks like it's going to hold firm. Like if I was bidding on freight in the Atlanta market, depending on how long it is, you're probably going to be at that $1.90 to $1.95 a mile all-in rate for spot markets on the fuel. I'm not saying that that's every load out there. If you can get more from your customers and pay your carriers more, that's what it's all about. Again, this is just a national average. This isn't every load that runs on Atlanta to Indianapolis or anything like that. So we got to take that into consideration, you guys. But again, it's like, to me, I do this to help you guys read the freight markets, because some people, when they bid on the spot market, they'll see that $2.27 a mile rate, for example, and they think that that's just what it is. And it's just not. You got to play it, pull it back to a 30, 60 day. Hell, I would even go to a 90 day. And as you can see, the 90 day was at $1.85. The 60 day was at $1.84. The 30 day spiked to $1.96, which you can see because, factoring in holidays, and then it's back down to $1.87 right there. So pulling that 90 day freight, it looks like anywhere from $1.85 to probably or low $1.90s is what the going rate would be out there. So that's what I would do in that. So yeah, you guys, again, I do those little freight market reports out there to try and help people read freight markets. And most importantly, not only for brokers, but for my drivers out there as well. So they can expect and they can see that. They can see that and they can help better prepare, because there are more profitable lanes that are running out there than what these national averages are. So that's what's important, is to put the right information out there to keep people in business. Stace, let's fucking go 2023. Thanks for joining, Stace. Always good to see you out there. I appreciate you, brother. Thank you, Whitney, for that. Yeah, there was some pretty big news yesterday that dropped in the industry. I was kind of surprised by this one. And the article came from the Wall Street Journal. And the reason I chose them on this is because I thought they had the most in-depth write-up on this topic. And that was C.H. Robinson Outstein, former CEO Bob Biesterfeld. I was honestly shocked when I saw that. It was because, I followed Bob's appearances when he was on like MSNBC Money and all that shit, talking about the freight market. And I thought he would, again, it was doing that. I thought that he was putting quality information out there at the time. And, it was even after the layoffs. And I talked about this, even after they laid off a bunch of people back there, I had put out my prediction that it was done strictly to preserve the stock price. And again, with a lot of publicly traded companies at the end of the day, it is their fiduciary responsibilities to the shareholders. And I honestly thought that they were doing that to protect themselves, to preserve their stock price throughout Q1, and being there, they probably bid very aggressive on a lot of rates that were out there. And yes, Walter, my dad made a hell of a lot more money back in the 70s and the 80s when he was driving as well. And I get it, man. The rates are pretty fucking ridiculous out there on a lot of lanes right now. So again, I thought that was a thing, but it looks like that, there was some other stuff that was going on. And I mean, again, I don't know. I'm not here to, I will say this. It is funny seeing all the Monday morning quarterbacks out there trying to put how they would handle it. And until you've been in his position as the CEO of the largest freight broker in North America, you don't know how you would handle it, because it's a lot fucking different when you're in the driver's seat as opposed to sitting there on the sidelines talking about your theory about what you think you would do in a situation. But anyways, he was fired as their CEO. And then the company said Tuesday, sending the America's largest freight broker by revenue into a search for its new leadership amid falling freight demand and growing competition from digital upstarts. I do not view Uber and Convoy as a competition to C.H. Robinson by any stretch of the imagination. C.H. Robinson appointed its Scott Anderson, the chair of the company's board, as interim CEO. And a day after, he was terminated from the business after 3.5 years at the helm. And then he stepped down as chair. Mr. Anderson stepped down as chair to take on the interim CEO title. And then Mr. Bysterfield's departure was an involuntary termination by the company without cause. It said in their company's filing with the SEC, Securities and Exchange Commission, on Tuesday. The freight brokerage has retained a search firm for it, and a spokesman for the company didn't provide any additional comment. It's been a privilege to lead C.H. Robinson and this exceptional team, Bysterfield said in a statement released by the company. I'm proud of all that we have achieved together, and that he had been there for 24 years. He's a young guy. He was 47 years old. And it is obviously they're the largest freight broker that's out there. And, it's reported that it reported 23.1 billion in gross revenue in 2021, and its last full reporting year, and its gross domestic revenue of 15.6 billion that year was nearly twice of its nearest competitor, Cincinnati-based TQL, according to Search Forum. C.H. Robinson's expansion into the strong shipping demand early in COVID-19 has waned in recent months, as everybody's has, and the company pulled back on hiring after their profit growth retreated as inflationary pressures. I'm not even going to bring that up. We were surprised, and again, it was like, because I was reading this, because like a lot of the larger banks out there on Wall Street too said this, that in Citigroup, they said that they were surprised by his termination. And we expect challenging near-term results due to sharp weakness in forwarding rates and a slowdown in truckload freight. But Robinson, under Bysterfield's leadership, was moving toward cutting costs and focusing on its digital platform. Our sense is that the board felt a change in leadership, along with the recent promotion of Arun Rajan to COO, would better catalyze this evolution. Brian Ossenbeck, an analyst at JP Morgan, wrote in a note to clients that his departure was driven by business results, and there weren't any personal reasons behind that. And it was, again, it's interesting to see this, and especially, but again, there's no better time than now to make a change, and whatever it was. Because here's another thing, that in November, Bysterfield said that the company is looking to find 175 million in gross cost savings by the fourth quarter of 2023, and said some of those cost cuts could include difficult personnel decisions. We got ahead of ourselves in terms of headcount, Bysterfield said, and we certainly didn't expect that the market was going to come down as rapidly as it did. I personally think, though, that, again, like, that's a testament to companies going out there and fucking mass hiring people And again, like if you're a candidate out there and you're looking for a job, like, that was, and I was talking about this back when people were essentially naming their price and getting hired for obscene salaries. Like, generally speaking, if you're not performing, you're going to be out the door. And it's a very tough pill to swallow for people because everybody thinks they're the hardest worker in the room. But if your results don't back it up, you're going to be done. This is where I don't agree with this article that Robinson has navigated an increase in competition from Uber and Convoy. If you combined Uber and Convoy's revenue, it's like the same as TQL combined. It's not even that. And again, like that's like their valuation. That's not actually what they're making. But again, I don't think CH Robinson really has a true competitor in this space, like in all reality, especially after XPO split up into multiple business units and everything. I think CH is kind of a standalone when their next competition is literally half of their revenue number as a whole. Again, and it also looks like there was it looks like a company was trying to buy CH Robinson based on this article, because, it competes with global heavyweight forwarders such as acquisition-minded DSV of Denmark. And DSV recently said that it's pursuing more business in the US. And they were considering a acquisition of the global forwarding arm of CH Robinson. And obviously neither company has followed up on the report. But again, I don't know. Who knows if it was he wanted more money or what? Maybe it was that acquisition piece that the board wanted to either get rid of the freight forwarding as a whole and they couldn't agree on a price and they're blaming Bysterfield for that, or they wanted to acquire the entire fucking company. You never know. So like when it comes down to it, I wouldn't be surprised if that was, the case. It was an acquisition that went wrong. And that's probably what it was. And again, if you fail to read these markets, especially in that role, again, you can't make, like, mistakes happen in life, but you can't make that mistake if you're the head of the largest thing. Like, you have too much data. Like, exactly what was going to happen. And again, sometimes people hauled out, people make mistakes. It is what it is. It's part of life. His package of compensation that he's getting over the next 2 years is very healthy. He's not going to be hurting for any time soon. But again, it's a good read, you guys. It's a very interesting read from the Wall Street Journal and their perspective about freight broker CH ousting CEO. And again, shit happens. It is what it is. I'm sure he'll be just fine as soon as his non-compete's up. I'm sure some private equity firm or somebody on Wall Street is going to pay him a fuckload of money to come and work for them, which is probably how it'll go. All right. Yes, states definitely agree. All right. Second article. And again, you guys, all these articles that I break down, I put the links up over on my YouTube channel, The Freight Coach, as well as the Coffee with the Freight Coach audio only replay, which is on iTunes and Spotify. I upload that almost immediately after the show. I put the articles over there because, again, I want you guys to read these on your own and not get sucked into the clickbait headlines that a lot of these fucking articles are that mainstream media puts out. Again, there's some really good information in some, and there's some pretty terrible information in some. And that's what we're here for, to talk about and break this stuff down and put some perspective in there about stuff. But, if you guys do go over to those other platforms, do me a solid and subscribe and share on those and rank those shows over there. It just helps. It helps reach that out there, because at the end of it all, you guys, if you guys see value in this, your network's going to see value in it as well. And because of all the support you guys show is why we are the top podcast in the industry. Like, it's because of each and every one of you, and I appreciate you all for that. All right, next article, freightwaves.com. Transportation prices fall at fastest ever pace in December. 6-year-old logistics manager index registers sharpest rate of contraction in rates. It was the LMI, Logistics Managers Index, a monthly survey of supply chain executives, displayed a 36.9 reading for transportation prices during the month. The rate of decline was the fastest record in 6-year history of the data set. A reading above 50 indicates expansion, while below indicates contraction. Their transportation utilization, 48.1, fell into contraction territory for the first time since April of 2020, while capacity of 69.5 expanded at a historically high but more tepid pace. With warehouse largely full of product before the start of the holiday season, less transportation than usual was needed to push goods forward at the last minute. The loosening in the trucking market has been evident out there. Outbound tender rejection index remained in the sub 5% range for the bulk of the fourth quarter. By comparison, carriers were rejecting roughly 1 out of every 4 loads at the same period in 2021. Obviously, just to explain that, that was because contracted rates were a lot lower than what you could get on the spot market. So therefore, carriers are going to decline and go make more money on the spot market. And then why contracted rates are being accepted and honored is because they're making a hell of a lot more money in their contract than they can in the spot market. This is just how the market goes. With carriers able to cover the majority of their volumes through previously contracted capacity, spot market prices continue to stay low. Waning demand and a lesser degree to a lesser degree lower diesel prices, which I don't know how they think that lower compared to the $5.50 a gallon, I guess, if you're looking at it from that perspective, but still ridiculously fucking high. The most recent leak that prices were down $1.27 since June. However, the cost of it was still 30% higher year over year. Yes, thank you for pointing out that diesel is still up massive amounts. The rate of contraction in transportation prices slowed as December progressed. In the first half of the month, it registered a 27.4 reading versus a 43.1 for the last 2 weeks. And oddly, transportation utilization was 13.1% points lower at 43 in the back half. The dip in utilization was likely due to upstream firms at the wholesale level having nothing to ship, while downstream firms continued to utilize more expensive last mile delivery services. Aggregated supply chain costs, yada, yada, yada. Much of the recent slowdown in inflation can be traced back to the reduction in logistics costs, with the Federal Reserve may get the lion's share of headlines for battling inflation. It could be the reason. Sorry, I'm not even going to read that. That's ridiculous. Inventory levels grew out there. Essentially, downstream respondents, our inventory cost warehousing, our future predictions from respondents peg the LMI at 53.2 in 2023 with the transportation price. So essentially, what this article is going to say, and it's something that I've been saying for a while, is eventually at some point in this next year, you will read headlines. And I just literally said this the other day. You will read headlines that contracted tender rejections rise, tender rejections at an all-time high, because the market's going to swing back. I mean, even if you include 2020 and 2021 and 2022 in this, the market operated in its normal cycle, 18 to 20 months of rise, and then it'll be 18 to 20 months of a fall in pricing. The only difference is during this last rise, it was at historic levels from a pricing perspective, but it operated in the exact same way. So if you're looking at it of how long is this going to last, if you take into consideration that middle of last year, you could even throw May in there, is when the market started to shift. So if that's generally the start of it, you're already in it right now. And then, so this year, at some point, my guess is that there will be that inflection point where it balances, where spot and contract are going to be very similar in price. That's when you're going to start to see tender rejection rates skyrocket, because they're going to try and make more money in the other. So, it's the educated roll of the dice, as they say out there. So I think this year is going to start to see a rebound in the spot market pricing. So if you're out there as a owner operator or a small fleet and you're relying on the spot market, you're going to see relief or at some point. I can't tell you, nor can anybody. Like, let's call it what it is. Nobody can sit up here and tell you exactly how much of a rise it's going to be. I just think a rebound is going to happen at some point next year. My guess is it's going to come late summer. It's going to come around that time is when you're going to see that. There'll be pockets in between, obviously around your holidays. There'll be an upcharge and stuff like that. But I think this year is going to definitely start the uptick for the spot market carriers that are operating out there, because people are going to go and they're going to bid super fucking aggressive in contracted rates. And then in January, you're going to see some appalling prices that people are going to try and move freight for. So again, don't take the cheap freight and let the person who purposefully bid low to snag market share sit on the freight, because that's how you work some of these providers out of the market. It's not your fault as a driver that a broker went in and bid at historically low levels just to swallow up market share, because they're putting your business at risk, and most importantly, in the matter, they're putting the shipper's business at risk too by doing that. But again, I think that there'll be some reprieve at some point next year, this coming year, for you all. That article, freightwaves.com, transportation prices have fallen It's no surprise to anybody out there. And again, the headline, although tells the truth, it can be deceitful at ways, but there's definite freight out there for you guys to move. My guest yesterday, he is a one truck owner operator, my man, and my man Tyler out in Florida. He laid out how he's going to attack this year too, you guys. So again, take it from the people who are actually in the market and what they're doing to stay in business during this market flip. And a lot of it is direct shippers. I had a buddy of mine who's a shipper on the show a couple of weeks back, and he said that go out there and introduce yourself to local shippers in your backyard. Go out there and make yourself visible in that regard. Third and final article, you guys, fleetowner.com. Industry stakeholders have high hopes for roadway safety. No matter what, you guys, nobody's life is worth a truckload. All right. There's been some very inclement weather across the nation over these I've seen the videos on social media, just like we all have, about the massive car pileups and everything else that are going on out there. If there's inclement weather en route for your shipment, don't push anybody. All right. No truckload is worth anybody's life. As the nation exits a busy holiday season filled with high travel volumes, technology, are working hard to ensure that 2023 is a safer year on the road. Overall, safety trends have been worsening for years. Traffic deaths reached a 16-year high in 2021. I don't think it's going to change anytime soon, said Heidi Simon, who is the program manager for mobility safety strategy at the National Safety Council, a nonprofit safety advocacy group. The pandemic exacerbated a lot of things that we've been dealing with for decades. Driving in general is still getting worse. Stefan Heck, CEO of vehicle safety platform told Fleet Owner, and we're seeing an increase in collision rates. We're seeing increases in damage from those collisions. The pandemic did not help. It changed. All right. Let me see. In 2021, fatalities and speeding related crashes were up 5%. The CVSA, as part of the Operation Safe Driver Week awareness campaign, which took place from July 10th to 16th, issued 36,000 warnings and citations combined for unsafe driving behaviors between U.S. and Canada's both commercial and passenger vehicles. So again, that number is kind of deceiving because it doesn't tell you how many trucks, commercial vehicles, because if it's commercial and passenger vehicles, there's a bunch of dumbasses speeding in their cars that were popped into that. Let me see here. Yeah, again, the data doesn't point it down. And I hate that the misleading data point that's out there and just lumping all the drivers in on that. Let me see. Potential safety infrastructure improvements. That there's a sign, even if recent years have seen increased infrastructure investments, which we'll see hopefully here coming out soon, as long as all that stuff's made in America, like they say. I think that distracted driving, a lot of stuff that this article goes into talking about where the safety emphasis is going to be out there in this year and what you can do as a fleet out there. Again, I'm a fan of people providing information which can help you become a safer fleet. I am not a fan of them mandating that you do a certain thing to move your truck or anything like that. But again, I think everybody wants safer roads at the end of the day. And frankly, you guys, like I had mentioned, nobody's life is worth a truckload. So especially in these winter months, you guys do more to prepare out there, especially for all of you brokers that are just sitting in your fucking office looking at your computer all day. Again, I'm guilty of that too. I'm in front of a computer. I can pull that information up for my drivers. That's what we do at Freight Coach Logistics. We give weather reports out to our drivers so they are prepared for that. And that's because I've had that happen where a driver picked up in Texas and delivered into Wyoming. There's a freak snowstorm overnight and the driver didn't think to bring stuff because it was fucking 95 degrees in Houston when he left. So again, what more can we do? Let's help better prepare people. If there's any chain warnings that are out there, especially Donner Pass on the I-80 is fucked right this time of year. So is the entire I-80 corridor. It's mainly fucked, especially when it comes into the mountain region. So if you're having any freight moving on that, do your due diligence, provide that common courtesy. And, and if you don't, ask yourself this: what information would you want to receive if you were in that position? So take that approach to set your drivers up for success, because as a broker, I don't have a business unless I have quality carrier partners to move my freight for my customers. That's how I found success in this industry, is by partnering with quality carriers and giving them literally everything they need to succeed on a shipment. But that's it for today, you guys. That last article, fleetowner.com, talking about safety. Yeah, we'll be back tomorrow, though. As always, you guys, the Freight Coach Morning Show, we are the top morning show in transportation. And if you are out there and if you saw value in what we talked about here today, you guys, at the end of it all, share the show. Because if you guys see value in this, your network's going to see value in this as well. Marlo Hutchinson, thank you. I appreciate that very much. If you guys see value in this, your network's going to see value in this as well. I appreciate you guys. I love you guys, and we'll be talking to you soon.